Hey, good morning, currency traders. Macroeconomics is falling apart around the world. Fantastic! Just buy some yen, buy some Swiss franc. It's a big deal. Currency traders, macroeconomics is Hey, good morning. Interesting, huh? Now, what's Japan going to do? The Chinese yuan is beyond 7.0, first time in 10 years or something. So Korea weakened their currency to keep up with the Chinese weakening their currency. Meanwhile, what happens to Japan? Wait till you see the yen. Oh my gosh. So this is going to hurt Japan more than the United States. It's going to hurt Japan more than anybody, probably. But whatever. Just make money. What's the big deal? Hey, by the way, I'm with Traders Way. My name is Wayne McDonald. I am the Chief FX Market Strategist for Traders Way. Thank you for being here at the Forex.Today YouTube channel. Thank you for the likes and the subscriptions and the comments. They are important, first of all, for me to interact with you. Second of all, for me to understand what you want from me, like how can I help? So if you leave in the comments or in the chat, for example, requests, then maybe I can cover those. But it's also important for our community. It elevates it in the eyes of the YouTube gods. So please like, subscribe every single day. And I think the most important thing is leaving a comment on the recording, on the videos. A comment. The chat, I don't think the chat gets any credibility. It's just you and me chatting, right? Like us chatting live. But leaving a comment on the recording is very important. So if you could just say hello or thank you or appreciate it and all that kind of stuff, please do that. It'd be great. So ask questions, ask comments. So today I think we'll do dollar pairs, yen pairs, gold oil, that kind of stuff. I think we should run through the calendar as well. And I think that'll be a day. That'll be a day, right? And let me introduce you to my little friend. I have a new coffee mug. What do you think of that? Yes. My new mug. Now, you guys used to laugh at me because this was my giant mug. Yeah. So anyways, to give you an idea. Yeah, so anyways, it's working out good. Because the nice thing, honestly, is I can make coffee and I don't have to go like reload and reload and reload. So anyways, boom! So thank you for being here. This Forex thing is a tough gig, especially if you break in discipline. Okay, if you don't break in discipline and you actually trade with a bias and you actually create trade plans first, I think you'll be saved from massive mistakes. Hey, Pong says no sugar. Absolutely no sugar. Random name says Starbucks is overrated. Somebody rates Starbucks? Wow. Cool. Anyways, yeah. Let me get my drawing tool. For some reason, it's never running Monday mornings. It must reboot or something. Cool. So one interesting thing is if you're a risk-off guy or gal, you know, that is a sell zone. Not that you should know. Remember, charts don't tell you what to do. So if you happen to be a bear anyways, that would have been your, the area you were looking to sell. And look, at every once in a while you get lucky, right? And that's the funny thing. If you're a trader and you open your charts and you're looking for a trade, you don't know what you're doing and you're going to lose. So if you happen to be a bear here, it's set up perfectly for bears, and bears got paid. That's pretty funny. Not that, again, nothing here would have told you, and nor would you have expected a move like that. That's just your sell zone if you happen to be a bear. Okay, but look at this. Yen strong, yen strong, yen strong, yen strong, yen strong. Euro, is this euro? No, that's Kiwi. Euro's strong right now, but I thought that would have been euro. That's euro. There's some euro strength there. So Kiwi is a little bit strong. I'm trying to see if it's the same time frame. No, it's not. So let's put some C4 on it. H4. Okay, all right, that looks better. Okay, so you're a little bit strong, but yen is also strong. Yen strong, yen strong, yen strong, yen strong. So what I was saying before is China has let their currency devalue. I think it's a shot off the port bow, a warning shot off the port bow to the United States, part of their retaliation package to the Trump negotiation policy. Great. Fine. I think both are making a valid point here. But the interesting thing is the yen gets unbelievably, ridiculously strong at a time when the Chinese currency gets very, very weak, the weakest in like 10 years. That's not good when Japan is competing with China for exporting. Huh? Like, think of that. Like, wow. Like, imagine like the cost of a laptop, a Sony Vaio went up $100, and what do you call those old IBM machines? Do they still ThinkPads? Anyways, imagine the Chinese ThinkPad is $100 cheaper today than it was yesterday, but a Sony Vaio is $100 more expensive than it was yesterday. So it's very compelling to go with the ThinkPad anyway. So just imagine it that way. Lenovo, yeah, I guess so. Will this trade war get worse? What do you mean worse? Who says it's bad? But anyways, will it continue? Yeah, I mean, what did I say? Oh, I'm guessing 4 months ago. That everything's going to be delayed until closer to the U.S. election. So yeah, it's going to drag on another year. And then Trump will sign a deal with China. It'll be heralded by everybody as a major turning point in global economics and blah, 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 blah. And Trump will try to ride that into a victory. Okay. Now, Sav says, will Trump get into the game and weaken the USD? How would he do that? We got to be very careful with our words, guys. There's the media twists things around a lot, and I'm afraid you listen to everybody, including me. You should just listen to me. Because I was listening to the news this morning, and it was sort of hyped up misinterpretation of, I think, reality. Right? Random says no, Trump said he would weaken the dollar. But how do you do that as a president of the United States? I don't know how you weaken the dollar. Now, the best way for a president of the United States to weaken the dollar, if they were going to try to do that, or let's say the only way, would be to announce some unbelievable fiscal package or policy that would stimulate the economy. So he would have to say, with congressional and Senate approval, which you might as well forget everything, but that they're going to spend $1 trillion. But that ain't, I mean, and the only reason the dollar would weaken isn't because of the package, but that it would support the economy, it would boost domestic profits because of the increase in government spending, and that $1 trillion would go into the market. And if there's a fractional banking part of that, then it turns into 10 trillion, whatever. Future expectations for future profits in domestic companies go up, and the stock market rallies, and everybody feels really good. But that's a very convoluted way of doing it. Okay? You guys are like, oh, it's easy with the random tweets. So no. You have to understand, how do you weaken the dollar? The central bank has to increase money supply. How does the Fed how does the President of the United States weaken the dollar? He doesn't. It would be a consequence of maybe a stock market rally through maybe fiscal spending, but it's not actually weakening the dollar. It's increasing investment appetite or risk appetite. So it's a consequence of what he's doing, but it's not actually doing it. And either way, he's not going to be able to do something like that. But I get concerned when you guys say things like that you're reading the newspaper or you're listening to a talking head and they're like, oh, well, Trump's just going to respond by weakening the dollar too. Whoa, you don't know what you're talking about. That person doesn't know what they're talking about. You need to, wherever that came from, you need to turn that off and cut it out of your life. And even I was listening to Bloomberg this morning, and the person went ape crazy. And this was supposed to be the sane person that's supposed to interview guests and get their opinions. You know, literally, Bloomberg should have no opinion. And this person was spinning it like the sky's falling and all this is going on and this other thing and blah, 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 blah. Like, oh my God, settle down. Like, just settle down. So I didn't say that random name. But anyways, and he says printing money, but no, the Treasury does that, not the President of the United States. And they only print money in, well, no. So again, no. Just no. All right, so let's go to what we can do. Okay, let's do what we can do, what we're supposed to do. Okay? When you perceive a risk-off scenario, and I think we were talking about this, maybe it was just Friday at non-farm payrolls, but I wrote something like, do you remember I was doing like risk on and risk off? I guess nobody can see that. Let's make this fatter. A little better. Remember, and I carried this to something else, and I carried that to something else. When you believe we are in a scenario, in particular global, risk off, people get out of their investments. Okay, I'm talking businesses, institutional kind of money. I'm not talking traders. I'm talking the entire world. When the entire world is perceiving the current economic environment as risky enough to stop projects, let's say, if that's the right word, right? Whatever the project is. So this might be buying and selling oil between Malaysia or Indonesia and let's say like Australia or something like that, or Japan or whatever, or it's a real estate deal, or it's a bond issuance, or it's one company buying another company. It's trade deals over the course of preparing for the big Christmas rush. All this stuff. If the perceived environment for doing business seems bad, these projects get killed and the money needs to come home. Okay? So that's like a risk-off scenario. So if you believe we're in an environment, in particularly global environment, not one domestic economy or another, global, okay? Then we went through two main funding currencies, Japanese yen and Swiss franc, okay? And if it's truly global, US dollar tends to get strong as well, okay? It's a funding currency. It's not actually a funding currency, it's a safe haven. So it's not quite, it'll behave the same. I mean, Swiss franc is also basically a safe haven. Japanese yen, well, it's mostly a funding currency. So they end up behaving the same way for different reasons, but it doesn't matter, okay? So write this down if you don't know it, because you absolutely 1,000% need to know this, okay? Like if you don't know this, you don't know currencies. You don't know you don't know it. You just don't know. Okay, so you need to write that down. So when there's a risk-off scenario, Japanese yen gets strong, Swissy gets strong, US dollar tends to get strong. If it's a global. Now, if it's not global, dollar may decouple from this, but the yen and the Swissy typically get strong. Okay, I've described it as like a prince or a sheikh from Dubai or a sheikh from Saudi Arabia. They get in their private jets and they fly to Switzerland, and they come out with suitcases full of gold and cash, and goes into the Swiss bank account. That's what you think of. Okay, so clearly, and sometimes you could use this in reverse. You can say, because of this, there's some macro risk. Okay. And you may have heard me say 1,000 times, I generally trade US dollar, and I generally trade Japanese yen, and I typically don't trade USD yen. I make decisions based on dollar because it's a reserve currency. I make decisions based on yen because I'm a macro trend trader. And everything else is sort of second best. Okay? Okay, you got that? So let's take a look at something else to contrast this a little bit. Okay. Swiss franc doesn't look a whole lot different, does it? So now you could say you prefer to trade dollars and yen and Swissy, because the difference between yen and Swissy doesn't seem to be a whole lot different. So you could say, let's say you were a bear now on pound. You might look at dollar getting strong. You could plan on a pound dollar short. You could plan on, remember I said plan on Japanese pound yen short and pound Swissy short. And to me, it's the same trade. Okay? So now with that in mind, I can look at the pound, or I can look at pound versus other things to see, well, if I'm fundamentally bearish on the pound, I might find, and then I compare pound versus everything. What if I found pound CAD was going up? What would that tell me if I'm already fundamentally bearish on pound? Well, the CAD is even weaker, and then I could sell, in this case, buy USD CAD and then sell CAD yen and sell CAD Swissy. You see what I mean? So I might start out this way. I'm fundamentally, well, first of all, I start this where I say macro is bad, risk off. Okay, that's the first part of my thought process. Then second of all, like, okay, if I'm risk off, I know what to do with these three. And I already know what to do with pound. So I wonder how pound is doing versus everything else, because I might find something weaker, and then I find something weaker, and I'm not saying that's true, but I'm just giving an example. I might sell CAD across the board first and then sell pound across the board. Right. Wayne, thank you for the download of your indicator, but can you tell me the setting? No, you have to install the templates, Dirk. So you don't have to do all that. I gave you the templates too. So you install the indicator like I showed you. And then on the chart, you pop in the template and boom, everything has the right setting, the right color, the right everything. Yeah, Ali, but there's also timing to it, that right, Ali? So I don't disagree with you, and I kind of am. But the issue is the reason we use technical analysis is to is to identify the right price to sell it, but more importantly, the right time. Okay. So anyway, so like for example, let's see if I have this pound versus everything. So going through that third step of the analysis, let's look at this. Make sure they're all on the same time frame. We call that congruency. Make sure we have congruency here. That's fine. Fine. And fine. Okay. And maybe make sure you see them. Yeah, that's okay. That's okay. All right. Do they look the same across the board? Well, Aussie's been stronger than pound for quite some time. Euro is, no, wait, am I seeing this right? No. Okay, dollar, I'm sorry. Dollar been stronger than the pound for quite some time. Aussie was stronger, but now is weaker. CAD has been stronger and really still is. Okay, this dollar is the same as that dollar. And Kiwi was stronger, but now is weaker. So check this out. What does this tell me? Sell Aussie, sell Kiwi. So now I could do something like Aussie Swiss franc. So now I can go to, like, let's say a Swiss franc scenario and say this would probably be a good sell. Oh, look, I set you up with that on Thursday. Huh? Let me clear some of this up. That's 2 weeks ago. 2 weeks ago, we had this trade plan. Banana, da-da-da. And look at the fractal of this. Oh, man, I missed that part. Look at that. Oh, my God, beautiful. 382, and then a 382 of the 382, and we fell. Okay, but anyways, you see how we went through the logic first, which is a bias, risk off. Because you know risk on, risk off, you know which currencies to then focus on. Then you went to your other bias that's fundamentally based, like I don't like the pound. And then you looked at the pound versus everything and found that the Asia Pacific currencies like Aussie dollar and Kiwi dollar were battered even worse than the pound. Then you get there and you say, well, I am assuming Swiss franc is going to be strong, and Aussie is ridiculously weak, even compared to the pathetic pound. And then you look over here and ciao. Okay? So that's called relative strength exercise. But that's a little advanced because we're taking in sort of a macro view and a micro view. Micro meaning one particular currency pair, okay? Jesus says, I'm enjoying your vast knowledge and fundamental analysis. Right on. That's why I'm here. Dirk says I did all that, but I don't. All your templates look the same. Only well, then you're doing something wrong. I don't know what else to say. When you install them, they work. Maybe you're skipping the process where you're not actually setting the template. But if you're putting them in the wrong folders, or maybe you have MT5 and not MT4, like most likely it's user error. It works, dude. It's worked for 1,000 people. It works. All right, let's see. So, So it looks like random's going to help you. ZAR. Well, tell me about ZAR. How do you think? Well, first of all, let's identify what kind of currencies are the Australian dollar and the Kiwi dollar. One way I categorize them was Asia Pacific. Is there another way that we can categorize those two currencies? How about commodity currencies? There's a high correlation historically between the Aussie dollar and gold. There's a high correlation for the Kiwi dollar with even things like milk, but other commodities. So if I'd say that, random name says, Wayne, why does most people like daily FX? They always give false reports. They say bullish, but it goes bearish. Yeah, I don't know anything about daily FX. Okay. I thought they got sold. It's not even an FXCM thing anymore, is it? But anyways, what was I going to? Yeah, commodity currency. And one way to check that is to say, hey, how's the CAD doing? Because CAD is also a commodity currency. We say oil, but the Canadian economy is much more complex than that, and it's lots of commodities. And CAD is doing better than Kiwi, as we know, but Swiss franc is killing CAD. So CAD is a little bit better than Kiwi, but Kiwi's, it's both quite bad, right? And then CAD yen way down too. So CAD is very weak, and it's almost as weak as Kiwi. So there seems to be a relationship. So let's just call Kiwi, Aussie, and CAD commodity currencies. And then we would say, well, let's call South African rand, because somebody was asking about dollar rand. Let's call the rand a commodity currency. Okay? In that case, we would expect USD ZAR, USD rand, up. And if you had like ZAR yen, you'd expect that down. And if you had ZAR Swissy, you'd expect that down. Okay? So we could do it this way. Okay? So you'd expect this to probably be up. Okay? You see what I mean? So I want you to learn what this rand is. What is the South African rand? I have it as an exotic, but besides that, what else is it? And it's a commodity currency. Okay. Okay. Yeah, I know what you're saying on spread, but there's two things you need to look at when you trade it. So if you trade it in the wrong hours, the spread is high. But when you look at the value of a South African rand, see the spread is in terms of the local currency, basically. So let's say it was 30 pips, the spread. And the 30 pips was worth $130. Now the spread on, let's say, on euro dollar was 1.3. Okay, and that ended up being $130. What matters? That this is 1.3 pips and this is 30 pips? Is that what matters? Or is it the $130 margin? Right? So I'm just making a whole thing up there, but you should look at it. So on your demo account, one thing that you should be doing, like, remember, your demo account isn't for you to trade with. Okay? It's not you're supposed to practice. There's a difference. Just going out round after round after round of golf, if you don't know how to golf, is not going to make you a better golfer. Okay? So, like, one thing you should do is say, I should analyze spreads. What does it cost me to put one mini lot on a euro dollar? Like, not spread, margin. So you might say, well, this one cost me $1.70, right? And then you're like, for a euro dollar, for a mini. And then you're like, okay, or that'd be a micro, right? So 17 costs you $170, okay, whatever. Costs you $170 in margin, okay? And then you're like, okay, let's play around with this. What does it cost to do a pound yen? And JPY. What, totally messed that up. What does it cost to do Kiwi Swiss franc? What does it cost me to do USD Mexican peso? What does it cost me to do, you see what I mean? What does it cost me to do USD ZAR? What does it cost me to do Euro Turkish Lira, for example, right? And you look at it, and you're doing this on your demo, and you're doing these all one mini lots, and you're actually calculating it, and you start adding it up, and you're like, you know what? It might be your opinion, if the trade opportunities are good, not on a mediocre trade opportunity, but a good trade opportunity, one that's you're going to be in for a week, let's say a swing trade. Is there really a ginormous difference in margin? A difference so large you would throw away a good trading opportunity? Because you'd be like, well, I would do it for a 2-pip spread, but a 5-pip spread, never. Well, I'm like, dude, it's a 300-pip move. You won't do it because it costs you 3 extra pips? You're like, yeah, man, that's way out of my budget. You know what I mean? Then you're like, I don't know if you're analyzing this properly. Because it's not actually pips, because you're like, I won't take the trade because 2 pips versus 30 pips is too ridiculous. Okay? I'm like, okay, but what if this was $20 and this was $22, and both of them are going to have a move where you make $1,000 profit? Okay, let's do it that way. So you wouldn't do the trade because it cost you $2 more, is what you're telling me, right? So again, please use your demo properly and use it to practice. Don't use it just to trade. Okay? Wait, if you want to trade, learn how to trade first and get really good at trading, and then you can practice trading. But most people that start, or let's say if you're new to this channel, you don't know how to trade. You don't even know how to be a profitable trader. I mean, wow, really? Right? So we got to get you to that point first before you just trade. If you trade a lot, but you're not a good trader, like how is it that you're getting better? Probably not, right? So let's break down how you use your demo properly. So that would be one, like analyze these margins and spreads and get comfortable with the different pairs, because the spread's higher, but the value of the currencies. Like I looked at something one time, I can't remember what it was. I think it was Thai baht versus, maybe it was just Thai baht yen. Okay, and it was like a 300 pip spread, and it was worth like 33 cents or something stupid, right? And I was making 2,000 pips a day, and it wouldn't buy me a cup of coffee, because the Thai baht is like for example, $1 is 100 Japanese yen, right? It's even less than that, but whatever. And then you convert that to Thai baht, and Thai baht is, another currency with a lot of zeros on it. So all of a sudden it's like, I made 2,000 pips, and I can't even go to Starbucks with my profit, right? Yeah, and then Jim brings up something that even complicates it further. Newer traders seem to be confused. I don't blame them, but get confused with the fractional pricing that is out there now. So when I say 100 pips, you're thinking you can make that in 2 minutes. No. You got extra zeros. So anyways, but whatever. I'm just saying practice. And then the next thing, how do you use a demo properly? You should say you are going to learn price action, and you're going to make 1,000 trades doing something like up, 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 down, down, buy. Up, 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 down, down, buy. Up, up, and that's all you're going to do. And you're going to get very comfortable. You might have 3 or 4 different currency pairs open, all on 5-minute charts, and you're going to identify the trend, which at this point should not be a difficult thing for you. And then you should either sell rallies or buy dips on 5-minute charts. And you do it over and over and over and over and over and over and over again. Like, no joke, 1,000 times. It might take you 3 weeks. So what? Right? Right, Jim. Okay. Cool. Anyways. All right. So anyways, let's move on. Let's move on.com. Boom. Cool. So, delete. Okay. And what is this? It looks like gold. Yeah. No, that's silver, huh? XAG. Why do we still have silver? I'm going to get rid of silver. Oh, and it just ran away. All right, so let's do something else. XAU. There's your gold. Cool. So we've breached the high side of the range. So what do you do now? Buy dips. Okay. So that's called your trade plan. That's a trade plan. Isn't that nice? That took a long time, right? So now you go into a 5-minute chart and you're buying dips. How do you do that? All right, let's talk about it. Up, 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 up. I should probably have this on as a straight line. Okay. That's the new buy zone when you're up here. Okay. So then it drops down, down, you buy it. Now what's supposed to happen? It's supposed to make a new higher high. Oh, look, it made a new higher high. So now what do you do? Somewhere around there, you're going to look to buy. So your trade plan, something like that. I'll probably put that too high. Typically, I'm going to try to grab this in some sort of area. Okay. Another way you could do this is fibbing, but this is a general lesson here. Okay. If you're practicing price action, this is what you're practicing. And you want to do it over and over and over again. Okay. Now, if this drops below here, stop. Okay. In fact, even if it drops to here, probably stop, because what it'll do is it'll set up a head and shoulders, right? So you don't want that. So really, let's clear some of this. What you really want is this zone in here. Let's make a zone, and we'll do it. Sure, yellow. Really, you want sort of a zone in here, and you could use Fibonacci for that. So if you don't like price action, use Fibonacci, but you need to get in the habit of identifying the trend, right? And then essentially scalping in the direction of your trend. Does these templates really work? Yeah, when you install them, they work 100% of the time. The algorithm never fails. Mr. Wayne, Aussie dollar has a cluster of pivots. Cool. So it should be an important level, right? Jesus fan says, Wayne, you are a good teacher. Thank you. I appreciate that. Can we do euro dollar? Sure, Stephen. No, your entry is in the yellow box. Your stop should be lower than the previous low. Okay. Okay. No, I think it was updated, PS. And I'm updating the process like right now. So maybe this is the last week of the current setup for downloading those templates. And so I will review what is in that template folder, and I'll probably update them later this week, probably even tomorrow. Okay. All right, so we'll move around. And by the way, even if this fails in here, you're only trading a 5-minute chart, right? So your trade plan was based on really a 4-hour chart, right? Or a 1-hour chart. But the trade plan is this, okay? So if you lost money scalping up here, is it dead? Is it over? No. First of all, you want to catch the 5 EMA. And then the second thing is the 21 EMA is catching up. And then we got this roll reversal. So if it doesn't work out here, it's just simply a timing issue. But you know somewhere around here, and then again somewhere around here, it's still likely to head up as you planned. Because the basis of your plan is what? Breakout trade. Breakout. Okay? So now you're scalping a breakout move. And you're assuming down, 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 up, 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 up on smaller time frames. Okay? So like if you lost money here, you can't say, oh, no, dude, you're stuck on the tip of a 4-hour candle, bro. Okay. I daily collecting about 10 pips per day. Yeah, we need to change everything you do, Russ. 10 pips a day is terrible. So let's change that. So the first thing you need to do is subscribe. Okay. Yeah, TBM says, yeah, sit all day for 10 pips. Well, then what happens is you realize you're not making any money, so what you do is you increase your lot size and you've just decided to bankrupt yourself. Yup. Yeah. Yeah, I feel bad making less than 100 because I have to justify that it was worth my risk and pay for my time. Okay? So like I couldn't even take a 10 pip profit. It's just not worth my time. So I discussed at FX Street on Friday one of the reasons why I would move my stop to -3 and just let it run. Okay. Next, you need to show up here every single day, positively interact with me and with the other people in our community, and do that for years. This is my 15th year doing webinars. 15th, 1-5. I've been sharing my ideas on how to trade Forex longer than your last guru has even traded. Right? And then if you have money, you could do things like take my courses. But if you don't have money, then just you have time. So then be here year after year after year after year. Okay? So anyways, that's how you do the little scalp, right? So now you should have your 10 pips profit. All right, cool. Let's take a look, move around here. Kitty CAD, things have changed, huh? Things have changed. So we drew this as a breakout. Was it Wednesday we drew this or Thursday? So it's had a bit of a pullback. I would still keep doing what I was doing before, and basically there's steps or ladders is kind of how I look at them. So you get this up, 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 down, down, buy, up, 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 down, down, buy, up, 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 up. Originally, we were looking at this as a way to front run future CAD strength. And I was hoping to get positive macroeconomics that would weaken the dollar and increase the value of the Canadian dollar based on maybe increased demand for oil. So, again, positive global economic news would increase demand for oil, which pushes oil prices up, which increases demand for CAD, which pushes CAD prices up, but also increases importing from the United States, which weakens the dollar. And so all of this said, like, hey, there's a good chance of this heading down. But remember, these are like trade plans. A trade plan is a hypothesis. And then you use technical analysis to confirm or deny. So our plan was like this, kicking off of this price level in the future and all that kind of stuff. And so on a micro level, it did go down, right? And then it went up, and then it kind of made a lower low. It seemed pretty legit. But now technical analysis has denied the hypotheses, and it died right there on the operating table. What happened is we have the consolidation, breakout, consolidation, breakout, consolidation. What do you think might happen next? Breakout. Oops, let's do that in blue. Blue, blue, blue. There we go. Breakout, consolidation, right? Well, how do we know that? Well, we don't know that. Well, why would we assume that? Well, it happened here, it happened here, it happened here. Maybe it'll happen again. That's a hypothesis. That's called a trade plan. So now you're planning on this kind of upward move. So you got to buy at support, right? So let's start analyzing that. Okay? If you were swing trading, where would you buy this? If you were buying at support, right there. That's your plan A. By the way, you knew this last week. Now, your plan B typically is down here for a swing trader, but we also already identified this as support. So really, plan A is a zone between that bottom and the pivot bottom, right? So you can kind of like choke this up a little bit and say, well, on Sunday/Monday, I want to buy somewhere around A in the pink zone. What? Okay. And if that don't work none, there's always plan B. But we don't want to even think about that now, right? And then what's the next move? Well, the next move is based on if you get this right. So if you get this right, it does this, which then begets that, which then begets that. Okay. Okay. Captain Coco, sorry, I think you asked a two-question question. And the chat goes by so fast that I can't keep up when you guys are having topics outside of what I'm doing. So let me try. Maybe if I expand this a little bit. So Captain Coco says, is it appropriate for me who's new to this? What is appropriate for you, Coco? Yeah, I don't understand the question. All right, Captain Coco, is it appropriate for you? What I mean is I don't have any knowledge for Forex trading. Yeah, but I don't know what you're talking about. Cool. Anyways, there we go. Okay, you see what I mean? So the basis of this is simply if it continues to do what it has been doing, that's what you would do. And that's truly what a trend is, right? Maybe Captain Coco meant taking the training courses because that's what Jesus was talking about. Yeah, a lot of them are quite, entry level, and then they work their way up, for sure. Has everyone done the free training course on FX Boot Camp's YouTube channel? Let's do this. youtube.com/FXBootcamp. All right. Playlists. Free training course by FX Bootcamp. I would start there. $191,000 views. Why? What happened? I'm offline? I'm not offline. No video, huh? All I did was open up a browser window. I didn't do anything. Let's see. No, it's broadcasting. An hour ago, we lost a frame. Is the video working now or not? .0% dropped frames. I'm doing 1,134 kilobits per second, 20 frames per second, 29% of my CPU being used. But video froze. Video feed is stalled. Refresh, because I can't do anything. You half offline, right? So, yeah, refresh your... I can't stop what I'm doing, because if I do it, it's going to start a new stream. Okay, cool. Yeah, it didn't look like it was me. There's no indication that anything went wrong on my end. None. Okay. Cool. Thank you. Thank you, Barry. All right. All right. So anyways, that's that. Ja. Ja. Ja, das ist gut. Okay, what else? WTI. Not the good. Not the good. Right? Let's do this. Okay. Lower low. You take this and you take that. So the area, the tools you watch on a new lower low have to do with the old low and the old high. Okay, and that ends up being your sell zone. One is more aggressive, one is more conservative, but that ends up being your sell zone. And then you, let's change colors here to, I guess, reddish. Then you use your pivot points if you're a bear, because both of that's bearish. And there's your plan B, and there's your plan A. Okay. So what elements do you think came together to set this trade up? Well, to me, it seems left shoulder. Okay. And it seems central pivot. Also, if you look at last week, this is where bulls were supposed to get out. So to clear all this up, now, unfortunately, I prefer this to go up, but hey, things are bad. Look at the projected high for last week. Central, central, and then left shoulder kind of thing, right? So it seemed to be really a confluence of weekly profit zone, monthly central pivot point. Does that seem about right? Now, random name says crude is going up. You should never say that. Okay. First of all, that's not a plan. Second of all, where's support, bro? Well, I mean, you need a lot of meat on the bone before you can make a declaration like that. I mean, this is a lower low, lower high, lower low. It's kicking off a roll reversal, riding a 5 EMA down. So you might be right somewhere or sometime. There's not enough information at what we're looking at right this second. Maybe you're doing something else, but when I'm showing you this, you should give a comment on this, not whatever else you're looking at, because this and this is ridiculously bearish. And there's nothing technical on this chart that we're looking at now that says up. Terrible. It'd be a terrible thing to say. Terrible. Terrible. It might be better to say, and I'm struggling to even find a way to say it. This is your weekly M2. Okay. But unfortunately, we're on a monthly support, and that's a bad pivot to be on. Monthly support 1. So that looks very bad. We're also technically lower than this, and we're technically lower than this. So on a daily chart, at least, this is aggressively, by definition, not my opinion, by the way. The fact that we're below the daily 5 EMA is aggressively bearish. So for you to, like, let's say, buy at the weekly M2, you're ridiculously aggressive against an aggressively bearish market. So it'd be like a terrible idea. Now, it might be a gamble and you might actually get it right, but again, you have to use analysis here, right? And that would be a really bad idea, in my opinion. Okay, so I have to start with this. I have to start with on this daily. So maybe like, well, Wayne, you rarely use daily, so why are you doing it now? All right, so then let's mark this. This is the obvious place to short, based on price action, based on pivot points, and based on moving averages. Like everything says short here. So for you to get long, I don't mind you being bullish as long as you don't trade your bullishness. You're going to need a double bottom, higher high, higher low, 1, 2, 3. Like it's going to take you, if you're on a 4-hour, that's going to take you a day. It's going to take you 24 hours to get that. So you might say, I might be a bull tomorrow. Okay. Random says global economy is what I was looking at. Okay, well, first of all, I was showing you a daily technical chart. So let's stick with the conversation. But that's okay too, but you could say, you must say it properly. You say, I'm still bullish on oil, okay? Don't say oil is going up, especially when we have lots of newer people in the room. Like, you can't say that. What you just said, you can't say that. You should say, I'm still fundamentally bullish. Great. Now you have to wait for the market to technically turn bullish too. And right now it's grossly, aggressively bearish. So if you started buying here, it's just bad. It's bad trading, right? Yeah. So you just don't say things like that, because I'm trying to train you and everyone else to get their head on straight. The last thing I need is people to trade this like degenerate gamblers and say, well, I'm a bull and that's an S2 or that's an M2. Whoa. That's not how you do it, right? Whoa. Let's have some forethought here. So when the market is bullish and that confirms your macroeconomic bias, then you should be an aggressive trade, right? So right now, at the bare minimum, I'm like this is so bearish. It's really, I have to make that point, right? That's all. So and this is, by the way, this is an S1. This pattern here doesn't typically happen off an S1. So it's like, this is so bearish, it's funny. But I am a bull, but I didn't say it's going up. You said it was going up, right? So anyways, this ain't going up. This is going down. This is going downtown. This is falling like a ton of bricks with two hammers on top. This is crashing. But if you're still fundamentally bullish, then what do? We need a double bottom at support. Well, you know what? I bet you it'll happen this way. It'll drop way down here, then you'll get a double bottom, then you'll get a high, but then this is going to sell off. So then it's probably going to make a triple bottom, and then let's say by September, be bullish again. Okay? That's how I would say what you just said, but I am not saying it's going up, right? Cool. So that's all. I'm not mad. I'm not, right? No. And I didn't tell you, right? No, I didn't tell you to shut up. I'm just like, I'm training you to be a leader. I'm training everyone to be a good trader and then a good leader. And in this case, right, we're leading ourselves. It's a mental process. So when you say things or when you type things, it's meaningful to other people around you, but it's meaningful for you. So I have to jump in as coach and say, no, don't say it that way. You can think it, but you have to preface it with, the market is technically bearish. I'm still fundamentally bullish. It ain't going up now, but I think it will go up in the future. Great. That's a nice way of saying it. And that's technical analysis will confirm when it is. That's why we use technical analysis, guys. It doesn't tell you what to do. It tells you when to do it and what price to do it at. Okay? That's why I like technical analysis so much. So what do you think, guys? Check this out. We had this set for a long time. And finally, we went from bottom to top, hit the top, straight back down. Now, how do you want to do with this? Like, let's delete this. I have two regression channels here. Should I leave the bottom one there, or should I delete it? Now, the funny thing is, right? The funny thing here is, macroeconomics, if they're positive, so let's say you're thinking like, will the Swiss franc weaken in the near future, at least to get back to the mean? It could happen. You need good global macroeconomics for that, but good good global macroeconomics tends to weaken the dollar as well. So that's why I very rarely trade this pair. Better random. So anyways, I'm going to get rid of the second regression channel. Okay, it's done its sort of job, but it's confirmed our top here. So let me update, because remember, the standard deviation might change. Okay, and we'll say, yeah. And do you want to go from that point, or should we adjust this? Where are we measuring from? Okay, changes, right? You do it that way, it could fall a lot. Okay. You do it this far back, it's actually going up. So it's your call. It's always our judgment. All right. Kitty cat we did. Gold we did. Did you guys enjoy that scalp? This was our buy zone, wasn't it? Down here. Wasn't this the buy zone? Yeah, well, I'm not really interested in the USD Swiss franc, so that's why I'm not really covering it. I'm not really interested in USD yen. I'll show USD yen because of the extreme pivots today. But I don't trade USD yen, so that's why I don't cover it typically. So let's do it this way. Okay, but check that out. Pretty amazing, huh? You guys remember doing these two lines, or well, I guess 4 lines? These are sell zones. Amazing, huh? Yeah. So what do you want to do? Well, it's dropping fast. Pays pretty good to be long. It's amazing, huh? So I've had a hypothesis for a while that said maybe by the 3rd week of August, the yen pairs would weaken. Well, right now the yen pairs are strengthening, and this has a lot to do with the trade war, really. But is there a price in which I start putting small positions long? Oh, there's always a price. Okay. So now it just depends. So I'm trying to think 2 or 3 weeks in advance right now, actually. Okay. The funny thing is, under current market conditions, we're at my buying price if you analyze the market. But if you're analyzing price, I might want to pick it up lower. So let me throw a hypothesis out to you. If it was down here 2 weeks from now, would you buy it? I might be into it. I don't know. And I'd do it, and I'm not going to take 10 pips profit to our new subscriber, whoever it was. I'm not going to take 10 pips profit. Okay. I will probably have a 33 pip stop, and I'll probably have a 3,333 pip limit. And if you think like that's really crazy, Wayne, then I'll say a minimum of 1,111 pips. Oh, what is this big move here? That was everybody in FX boot camp selling. I spent months preparing for an early January crash in the yen pairs. It was supposed to happen over the course of 3 weeks. It happened in the course of like 3 hours. Sorry, but I did prepare everyone weeks and weeks and weeks in advance and talked about it day after day after day. And then it happened. But I'm not in control of the velocity of the move. But this whole move here, and then the false rally, and then the resumption of trend was all predicted in the circle part. So what was supposed to happen in the beginning of this year, let me move to black. It was supposed to fall the first 3 weeks of January, have a false rally, and then continue mission into the March and then June central banking meetings. Okay. Now, Manipur says it was a flash crash. It did happen very, very, very fast. There's no doubt about it. But it can't be a flash crash if you prepared, let's say, one solid month. If you planned one solid month for the move and then it goes pa-chow, it's not necessarily a flash crash, because that a flash crash is actually a mistake, right? It's a mistake in the market. It's when mechanisms break down. I would think of it this way, because you're not giving it respect when you say flash crash. You're like, that's random. It could have happened to anyone at any time. No, that's bullshit. We all prepared for it, which means so many institutional, professional, and traders did what I told you was going to happen, that it triggered stops, which triggered stops, which triggered stops, which triggered stops. But it was a massive sell-off, so big that was the velocity it created. But I prepared you not for a month, for probably 4 months. I prepared you guys for it. It's going to happen. It's going to happen. We talked about the first week in January, and that it would fall until the 3rd week of January. But what day, what time, how far, how many pips, how fast will it last? Will it be 1 hour or 2 weeks? I don't know. There's no way it possibly could. But I told you 4 months in advance that in the first week it's going to fall, then it's going to have a false rally in the 3rd week, so stop selling. Okay? Random I could just hear Random's mind blow. Okay? Can anybody confirm that this is 110% true? Four months in advance, that the first week of January, the yen pairs were going to crash, and they would stop falling by the 3rd week, which then the yen pairs would rally, but it's a false rally. They would not make a higher high, and then they would then resume their downward move into the central bank meetings. How many people can confirm that that's 110% accurate? That there is no fluff, backward analysis to make me look or feel good, but this is exactly what we did. And we talked about it not once or twice, but like 17 times of that what is going to happen. That's generally when it's going to happen. That's generally when it's going to stop happening. And then once it stops happening, what that would stop happening would be like, and then what would happen after it would resume. Yeah. So the bigger question, so now we go back to random, and he's like, oh my God, well, how could you talk about this 4 months in advance and 3 months in advance and 2 months? Well, I've been doing this a long time. Yeah, I've been doing this a long time. Cool. That's the thing. That's what I'm trying to teach you guys. We will get past the moving average crossover and the 1, 2, 3 pattern and what should I do at this price. We're going to get so beyond that, guys. Okay? We're going to get so beyond that we're talking about the way the market works. I want you to truly know. I don't want you to follow rules where you're like, it says after the 2155 crosses down, you should wait for the retracement back to the 5 EMA and then take a 5-minute 5 EMA cross down. Okay, so I will go find that, right? Like, that's where we start because you need to know technical analysis, right? And you need to know when is it a good time to buy, when is it a good time to sell. But that is like the easiest part. The next step is to really understand. You don't need those rules anymore, right? If you understand, and the analogy there is the matrix. You're going from, seeing the woman in the red dress, which is your 5A cross down or your 2155 cross down. That's the blonde in the red dress. But wait until you're like, oh, so China changed the value of their currency in response to the trade negotiations, and Japan got crushed. And why did the Asia Pacific commodity currencies get crushed too? Does it have something to do with import-export trade between Asian Pacific countries and China? You're going to become an expert, international trade financier, right? Right? It's going to be awesome. Now, here's the funny thing. Random's like, so did I give you the price it would drop? No, I did not. I only told you the week it was going to happen. The rest is up to you, man. That's it. No, I told you it was coming. I told you it was coming. It's coming. It's not this week. It's going to be next week. It's not going to happen this week. It's going to happen sometime next week. I don't know when, but it's going to happen next week. After that, it's up to you, man. I'm right. That's that. Oh, and I explained why, which is also, to me, why is also the $1 million question, right? So anyways, and by the way, we did something similar the year before. Oh, and by the way, we did something similar the year before. So I don't mean to come across like that I believe I'm a genius and I'm pitching myself as like a guru with a crystal ball or something. No. You can know. I want to teach you this. Okay. This is a pattern since I've been doing this for almost, let's say 15 years. I've seen it before. I've seen it many, many times, and I've become accustomed to it, and it's part of my regular analysis. And I'm doing my best to teach you is sometimes you're not teachable until you listen. You're not teachable until you're willing to accept my message. And for some reason, it takes a long time for people to become teachable. So I'm just trying to tell you, like, this is the stuff we did last year. We absolutely did it. Okay? And it's part of our history. The thing is, will you learn from it? And I'm just trying to show you the impact of having a trade plan and understanding fundamentals. And then you drop into your technicals and like, dude, what price and what time? You knew the week, you knew the direction, you just had to be there doing your job. That, right? It's just that part's the easy part, right? If you know it's going to fall and you know it's going to fall this week, but you don't show up to work to do the trade and do the analysis, right? Then forget it. You don't deserve it, right? Right? And that's the thing. You gotta say, oh my God, Wayne said it's going to drop next week. I better be ready. I gotta be there. I gotta be at my charts when the market opens, and I gotta get up early and I gotta be there. And now I gotta get my technicals all together. I gotta be ready. And you either did that or you didn't. Right? You either did it or you didn't. So anyways, but you will learn. I will teach you. Unless you're unteachable. And that's not my problem. You'll have to talk to mom and dad about that. Damn it, Mom! Why am I so unteachable? She's... You're a hard kid, son. All right. That's too funny, though. All right. So we did all those kinds of pairs. I don't know. What do you guys want to do now? Give me a... Give me a currency pair. Maybe I didn't do euro dollar. Did I do euro dollar or not? I thought I did, didn't I? Let's start over again. So here's the role reversal. That's a big doozy. You got to go, like I showed you, you got to go left shoulder as well. So we got something there. This is a big move on that euro, though, huh? So this one is a tricky one. On a daily basis, though, there's lots of information here, okay? Where's the dynamic resistance? Okay? Where's the dynamic resistance? Right here. Okay? That's question number one. Number two, where's the market resistance? Well, there's two right now, A and B. Okay, and then so let's do three. Where is the price? I guess I should just do price. Price resistance. By the way, do you appreciate that this is how I go through my thought process? Resistance. Not even trying to spell it anymore. All right, price resistance. Well, this is actually a trickier one on this daily chart. So let's do that one in a different color. Well, this is a bit of a problem here. And then this is a bit of a problem here. And then we have that top, right? So then lastly, what could we call we have to like take all of this and turn them into a trade plan, right? So where is the first sort of sellable resistance? I'm going to say, let's combine these three things. Well, there's this, there's the central pivot, there's a 21 EMA, there's the left bottom, right bottom combination. So this is our sell zone. So if I were me, I would not buy euro dollar now. And I don't care if it goes up even farther, because I wouldn't buy it now. I wouldn't buy it in 5 minutes. I wouldn't buy it 22 pips above where it is. I wouldn't buy it. I don't buy high. If you're buying it because it did this, you don't know how to trade and you will lose your money. You have to understand that. You're not, if you buy now kind of stuff, you're not in control. You're reacting to the big green candles. That's the recipe for failure. You are reacting. Okay? So I cannot buy here. I will not, Sam, I am. Okay? So it turns out there's really two things if we want to dumb this down a little bit. And I'm a big fan of dumbing down. Okay. You sell hard off the daily 21, or we try again on the 55, but I think at that point it's only going to do this and then maybe that. Okay. What do you think? So, do you want to drop in and see if we get a sell opportunity now? Hey, good idea. Let's do that. Come with me. Let's go to the 5 minute. Boom! Shalakalaka. So now what do you want to do? Do you remember practicing the price action? If you get this right on a daily chart, this might turn into trade plans that look a lot like this. Down, 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 up, up, sell. Down, 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 up, up, sell. Down, 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 up, up, sell. Down, 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 so on and so forth. Okay? And then if it does like, let's say down, 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 up, up, sell, down, 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 up, 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 stop selling. You only sell lower lows, not even the lower low, the lower high off of a lower low. So if it makes a higher high, stop. It's only a 5 minute chart. Get over it. Okay? Because you know, let's say on an hourly chart, because we were on a daily chart. Oops. You know on an hourly chart, it's going to do the same thing, isn't it? Which means it's going to fall for 4 hours. It's going to rise for 3 hours. It's going to fall for 4 hours. It's going to rise for 3 hours. It's going to fall for 4 hours. So on and so forth. So what does it look like on a 5 minute chart? What does that look like on a 5 minute chart? You know, 8 or 9 sell opportunities, stop selling. 8 or 9 selling opportunities, stop selling. 8 or 9 selling opportunities, so on and so forth. You get it? All based on your analysis of the 1D chart. Okay? That creates your bias. In this case, it's not a fundamental bias. It's a trading bias. So you remove all that. It's not a bias. What is it? Strategy. Because your bias is bearish. So your strategy is be a bear. Your strategy for at least today, let's say the next 24 hours, you're going to drop into a 5 minute chart and scalp this sucker. But only in market conditions that are favorable. So only when it's falling, not when it's rising. Only when it's falling, not when it's rising. Only when it's falling. Then you say, well, wait, well, how do I know it's falling or not rising? And how do I? Dude, that's technical analysis. Again, very easy question. If you don't know how to do it, we can fix that. That takes education, right? So you have to understand, like price action, for example. Let's delete this out. It was falling, right? Down, 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 up, sell. Down, 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 up, sell. Whoa! Down, 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 up, sell. Down, 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 up, sell. Up. Stop selling. But what if you're a bull? Down, down, buy. Up, down, down, buy. Up, down, down, buy. Up. What do you think's going to happen next? Let's take a big guess. Down, down, buy. But what if they don't? Down, 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 down. Up. Down, 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 down. Up. So you got to know, right? You got to know when to stop buying and when to stop selling. And then you'll say, well, why did this happen, this big move here? It was so bullish. Like as a bull, you're like, I bought the double bottom, I bought the higher high, I bought the higher high, bought the higher high, or a higher low, higher low, higher low. Why did it turn here? It's the daily 21, y'all. That's why we do analysis. It's the central pivot point, monthly central pivot point, y'all. So on and so forth. So if you see a turn here, it could technically be important. But on this 1 hour chart, you don't see it. On a 5 minute chart, you don't see it. That's why strategy comes first. That puts you in Strategy puts you in control. It's been going up now for 2 days. So what? Yeah, I know it's 1 hour. But I know it's the daily 21. I just showed it to you. So based on that information, now my strategy is if this rolls over, kill it, crush it, destroy it. And what you're doing is you're taking all their profit away from them because they suck. They're weak. They're old. They're sick. And you must cull the herd. It's your moral duty. It's your imperative to cull the herd. You're a wolf. And this is a zero-sum game, so you're a lone wolf. And it's your natural instinct to cull the herd. No, I didn't say short, random. I said prepare using technical analysis to confirm or deny your strategy. Okay? This is ridiculous to be shorting, but you should be preparing to short. So your strategy is one thing. There's your strategy. Now you use tactics to confirm or deny the strategy. And that's why you look at things like drop into a 15-minute chart, drop into a 5-minute chart, look for EMA crossovers, look for oscillator crossovers, look for reversal patterns. And then when you can confirm that this might be setting up remember, it's a strategy based on what you saw on a daily chart. Then you know what you're doing on the 5-minute chart. So many people, they like our friend that came in today and said they're trying to make 10 pips a day or they're only making 10 pips a day, is because they don't have a plan. And what they're trying to do is they're trying to sell here and sell here. Maybe it drops 25 pips and then they take some profit and then they sell again and then they sell again. But there's no control and there's no strategy. Okay? Right on. Thank you, Marina. Now that's funny. You want a cup of coffee? Rah! Now there's some coffee. So anyways, right? Are we confirmed here? Does this look like a good opportunity to sell? We have a 5-8 kiss here, but look at, we're still riding the 21. So you know how to do technical analysis, right? So what it does is it hits the 21 and rises, but then it falls to the 55, and then it rises, and then it falls to the 200. So on a 15-minute chart, by definition, in my book, I say if price is above the 21, you should be bullish and aggressive. Okay? I wrote that 12 years ago. So I'm not making it up now. So on this 15-minute chart, is it bearish? No. Well, what if we were down here? Well, that tells us we're coming down to the 55, and then what does the 55 tell us? Probably will double top. Oh. So now let's add this up. On the daily, we think there's a reasonable chance over the next 24 hours it's going to roll over off of the daily 21. And there's some price action, some pivot points, and some other things. So somewhere around this monthly pivot point, it might roll over, but it'll probably take 24 hours, maybe 48 hours. We don't know. Okay, great. So is it happening now? No. Okay, cool. But what would it start to look like? Well, it kind of breaches through the 21. Shields up, red alert. That's an exclamation point. Okay. So now Ali says wait for 2155 cross. That would probably take 24 hours, right? Even on a 4-hour chart. So it's not necessarily that, although that is helpful. So we know this is actually a buy. We know that. Again, I wrote a whole book on it. And then down here is a buy, but expect a double top. So that only gets us here. And then that would drop us to the 200. So you'd have to put a lot together here. Okay. So it might be London Open tomorrow you're shorting off of our trade plan we created today. Okay. Much better than reacting. Okay. So we're already actually probably talking tomorrow. Okay. Prince Philip says, what's my favorite blend? You know what? I have very expensive coffee. I have, I think, 4 pounds of Jamaican Blue Mountain in my freezer right now at $100 a pound. My favorite coffee the last few years has been something that is at Harvard. So regular Harvard students, you could be a Harvard College person, and you're living in a house. So I was in, I ate at Kirkland this year, the Kirkland House. Go Kirkland! So I was in Kirkland House, and last year I was in Quincy House, and the year before I was in Cabot House, and they all have the same thing every year from the Harvard housing food people, whatever. It's called Fog Buster. Okay? They take 5 different coffees, which is nice enough, but then they roast them 3 different ways. And it's a strong coffee. That's why it's called Fog Buster. They have regular coffee, but it's 5 different types of coffees, but then they take the 5 different coffees and then they roast them 3 different ways. You know, let's say probably super dark, medium dark, and light dark, light or whatever. And they blend them together, and I like it. Right? I like it. Okay. So anyways, going back to this, if this rolls over now on a 15-minute chart, the assumption is the future 55, which would be about here, is the target. And then it's going to make a lower high or double top. So the target then is going to be here or here. So the downward target is here. Then the upward target is kind of around here. And then it's going to come over to the 200 and then rise, at which time the 21 will be crossing below the 55, which then means you take the next 5A cross down. So I got like, if this rolls down now, I could scalp it for the next hour and a half. Then it's going to rise up for a while, so I could scalp that for an hour and a half. And then it'll drop down in here, so I could probably scalp that for 2 or 3 hours. And then that sets up a small little scalp, which probably would only last 1 hour. And then, so I'm already looking way right on the chart here. And then that 21.55 cross would be down, so therefore I'd be shorting the next 5A cross after that. So I have one, if this drops now, if it drops now, I'll have probably 3 trades here, 2 trades here, 3 trades here, 2 trades there, and then one big bearish move here. But I also know that that is set up on the daily. So the 12th scalp, right? Let's say these are all scalps, 25 pips each. Those 12 scalps, but the 12th one, I'm going to make 300. Yeah, that's how I plan. Why 300? Because it's our original trade. It rolled over on the daily, and then I'm going to trade it off the monthly central. So we know we're going to the monthly S2, right? You know that, right? So that last trade, I'm going for the MS2, where even if you were world's greatest scalper and you scalped all these down and all these up and all these down and all these, you're probably going to walk away from this. And it's the 300 pip trades that make you rich, not the scalping. And the only reason I know it's there is because I've done analysis and I'm in control of my trading. So if I do roll this over, this is heading down. But you notice I've already done all of this for you last week. You already know this. What we knew it was coming back. Okay, it went higher than we want, but I'm totally fine with the D21 EMA. Totally fine with that. This is a ginormous sell, and we're going down here. That's all I know about. That's all I care about. If something's going on with the euro to kill this, then I'm going to do this on the Great British Pound. You understand? Like if euro ain't our dog, I will find our dog. Or should I say our moose? Maybe it's our moose if we're going to cull the herd because we're wolves. All right? Then I will find my sick and my weak and my lazy. The thing is, it's not sick and weak, it's lazy and ignorant, as Michael Jackson would say. They're just ignorant. They're ignorant. So then it's your duty to destroy them because that's what you do. And it makes the whole market healthier. What's the name of the book? Well, you could go to Amazon.com and type in Wayne McDonald. You could do that. But every single day I talk about using a bias for a strategy like I did today. right? And once you have your strategy set, you use technical analysis to create tactical trade plans. Okay? So, because that's how I teach people to trade, I very cleverly, it's the first book I ever wrote, but I was clever enough to then call it Strategic and Tactical Forex Trading. By Wayne McDonald. Very clever. But by the way, I don't make any money on it. I really don't. So I don't care if you buy it or not. I'm not here to sell you the book. I honestly don't care if you buy it or not. If you do, I actually wrote it. I still have carpal tunnel. No joke. When I touch right here, it hurts. And also right here, it hurts. A lot of that is from writing the book. I'm not joking. So it doesn't benefit me at all if you buy this book. So I'm not selling you a book. Okay? Just let's be careful. So whatever you do, you do. But it is one way to get help. Okay? If you don't have if you don't have $1,000 to take a course at FX Bootcamp and you only got $50 to your name, buy the book. So it really comes down to that. And I don't know, is there any other questions or should we call it a day? I will be here tomorrow and the next day and the next day and the next day. Okay. Just the lira trades on this account random. Okay. So I guess I will see you tomorrow. Peace on earth. May the pips be with you. May your profits be above average. I hope you had a wonderful weekend. I hope your trades are going your way. I hope your plans are coming together. But what was sort of the thing we talked about today? We planned out tomorrow's trade on Euro USD. It might not work. Well, then we basically have Wednesday's trade also planned out because we'll try again. Remember that your fundamental bias was bearish, so you either sell at this resistance or that resistance. Okay? So that's the whole idea, guys. Having a bias, looking at medium to longer term charts, trying to find the right prices that you would consider selling, and then using technical analysis to create tactical trade plans to enter those types of trades at the right prices with the right market conditions. Because if you're a bear, okay, let's put it this way. If you're a bear and you're a bear and the market conditions turn bearish, right? The market agrees with you. You're selling in a falling market. You're probably, oops, I'm not on the right screen anymore and I can't switch. But anyways, I know what I can do. I can go back to this and I can turn this back on. So if you're a bear, this is your bias, and market is technically bearish, but the market conditions on smaller time frames are bullish, then when this rolls over, selling in a falling market probably leads to better trading results than what you've been doing. And that's all I'm trying to do is teach you how to get there, because I think that's very important. And the only way to do it is to plan ahead. So like I say every day, there's 4,000 videos on YouTube associated with my work. Feel free to watch every single one of them. Make sure you subscribe. And when you come across any video you watch